Hi, and welcome. I'm Amber McAuliffe, the Learning Director at the Ohio Society of CPAs, and I am joined by Melisa Galasso, CPA and founder and CEO of Galasso Learning Solutions. Melisa is a longtime contributor and thought leader to OSCPA's learning curriculum, and I am so thrilled that she could join me today for a brief but impactful discussion on what's going on in the technical accounting landscape and how auditors and audits are being responsive to this. So thank you so much for being here, Melisa.
Thank you so much for having me.
All right, so I figured we could just dive right in. And I think the most obvious spot to start is leases and the lease standard, because the Financial Accounting Standard Board just recently issued an ASU in this area. So what can you tell us about that?
Absolutely. One of the more complex areas of the accounting standard for leases is around common control arrangements. Very often with private companies, these aren't necessarily documented. They're between parties under common control. And when they were trying to apply the standard with no written documentation, with a lot of this related party element, it was very difficult to determine what was legally enforceable, which was the requirement of the standard. And so FASB took the feedback and recently issued an ASU 2023-01, and they're now going to allow these private companies and nonprofits that do not have conduit debt to just document the written terms as they agree to them. And then they don't have to determine whether they are legally enforceable. They don't have to try to determine whether there are implied obligations or implied options. They can simply just take what is written. This practical expedient is only offered if it is in writing. So it will be very important for smaller organizations and these private companies to take the opportunity to do so. And in transition, they even allow them to document last year's information. So during the transition, even if you didn't actually have it in writing, you can put it in writing in order to be able to meet the requirements to be part of this practical expedient.
And the timing of this is obviously something that's worth just smiling at, because the effective date for private companies was
December.
yeah,
So,
December. Yeah.
so it was December 22. The standard didn't come out until March 23, but they did allow early adoption for transition. So if you're in the middle of adopting this, and I know many CPA firms who were aware of what was going on and part of the conversation were actually holding the reports so that they could have this actually issue so that they would be able to take advantage of this wonderful practical expedient.
Perfect. And that's just the world we live in. You need to be responsive to feedback, and these are big changes. And so they're going to continue to have evolution to them.
Absolutely.
And I feel like I can never talk about leases without at least mentioning revenue recognition, because they were so paired together with a lot of hype over the years, rightfully so, because they were very significant impacts to the financial statements. So now that we're a couple years past the effective date for revenue recognition, have there been any aha moments, recent challenges, anything from peer review at the national level that's worth commenting on or talking about now for revenue recognition?
Absolutely. For a lot of organizations, there's actually very little impact on the actual income statement, right? Revenue line item might not have changed. However, because we move from a rules-based to a principles-based approach, even those industries that did not have an impact still had significant disclosure differences. And what we're finding in peer review is that we aren't seeing the disclosures that really should be part of this. So even if you don't have a material impact on the actual income statement itself, your disclosures do have to move to that more principles-based approach. And we're seeing some issues in peer review around that. Now, there were some industries like software, et cetera, that were impacted in a material way on the timing of recognition. But all entities, regardless of whether the numbers were changing, did have to adopt these new disclosures. And I think there was a little bit of confusion when there wasn't a material impact. People didn't feel like they had to go and do all of these disclosures. And so we're getting a lot of feedback from peer review as we go through this. And so you really want to make sure that you're using those disclosure checklists and going through all of those more principle-based approaches, even if it didn't have an impact on the numbers or how or when you recognize revenue, the disclosures still have to be clear to the user.
That's good insight and considerations. So now that we just spent some time on like current standards that are out there, let's move into what's on the horizon. And I know Again, financial reporting, financial statements, they're always evolving. And so I would say the next two areas of focus would be environmental, social, and governance, known as ESG, as well as digital assets. So what information can you share for our viewers today in those areas?
Absolutely. So recently, the FASB actually issued a brand new exposure draft around these digital assets. It is a narrow scope, but it would provide information about recognition as well as new disclosures that would be required for cryptocurrency, digital assets. Again, as they're looking at this, they do have to provide a scope because there's so many different types of crypto and Bitcoin. And so everyone kind of uses them synonymously, but they're really not. And so as a result, we want to make sure that we're in the scope of the standard, but to provide better accounting because cryptocurrency or digital assets are not currency themselves. And so they fall under the intangible guidance. And that intangible guidance is really a cost and impairment approach, which really doesn't reflect the value of them. And so the proposal would allow a movement towards a fair value and some separation in terms of the presentation and disclosures of those items. Similarly, we're seeing a big movement in ESG. It was one of the top items that came out of the invitation to comment, the ITC that the FASB put out in 2021, and a lot of interest there. So there are two different projects that the FASB is working on in that area, and the AICPA recognizing the importance of ESG and the movement that we're seeing from the SEC in particular around proposed disclosures has put together a really good guide, an A&A guide on what can we do as auditors if we have people who want to provide this information and want some assurance as to what that would look like.
Yeah, no quiet moments in the accounting world.
Absolutely.
So as we think about all these changes, to your last point, auditors and audits need to then also adapt and evolve with these changes. So in the area of risk assessment and how they're approaching some of these newer areas, I'd love to hear.
Absolutely. As accounting standards move from a rules-based to a principles-based approach, whether you're applying FASB or GASB or the international accounting standards, all of this is moving to a principles-based approach. That creates more estimates and more estimation uncertainty. And so this year, we are going to have SAS 143, which is related to auditing accounting estimates, as well as SAS 145, which is risk assessment, really take a new look at how we audit and provide a little bit of a different view instead of Sally, same as last year, really trying to understand how these changes in financial reporting are impacting organizations. And so auditors will have a suite of new standards this year that they will be following in order to really reflect the changes that are happening in financial reporting as we look forward. And I think the AICPA is really trying with these implementations and these A&A guides to keep us up to date on what we need to do to be responsive to what the preparers have to do and what honestly investors and users want from a financial reporting perspective.
It's amazing. Well, thank you, Melisa, for your insights in this brief, but again, impactful interview. We issue a quick Byte on demand, which is a 10-minute clip about that standard so that you can get a quick kind of insight into what's going on, what the purpose is, and who it impacts and when it's effective. Those quick bites come out throughout the year, and they're in response to any new technical standards.